Hey everyone, today I want to cover a micro-cap company with a market cap of just around 1150 crore, and it's a tech company. This company is backed by investors like Mr. Ratan Tata, Nandan Nilekani, who is the co-founder of Infosys and chief architect of Aadhaar Card, then Sachin Bansal, Binny Bansal, and so on. And it also includes top firms like Elevation Capital, Excel Partners, Sequoia Capital, Prime Venture Partners. In fact, even ace investor Mukul Agrawal has invested in the company. Can you guess the name of the company? Well, it's Tracxn Technologies. Tracxn launched its IPO in October 22 at rupees 80, and then almost for a year the share price consolidated. However, the share price has recently jumped nearly 50%. Although since the IPO the returns are still just about 20%. So the next few minutes I'll try to dig deep into Tracxn business model, key strength, leadership, future growth prospect, financials along with valuation. Towards the end we'll also look at the key risk in company's growth thesis. I'll also help you understand why company share price consolidated for almost a year and why there's a sudden surge in its share price recently. And friends, before I discuss the fundamentals of the company, let me inform you that I have done a detailed analysis of the company that include reading its annual report, investor presentation, con calls, management interviews, RHP document, visiting company website, and also reading on other forums. And my research found that it is looking very promising. Having said this, I might also get wrong sometime. Then another point is that currently we are in a bull market and stocks are giving great return. But that might not always be the case. Corrections are part of equity investment. The only factor that will differentiate the winners from losers in the stock market is the conviction and patience. In fact, like I said earlier, if you are convinced with a business, any correction will only create buying opportunity. In the last video, I discussed about Max India and share price immediately zoomed around 35%. Although I've already clarified in my post that's a pure coincidence, I just want to reiterate it here that please do a thorough research before investing your hard-earned money, because then only you will get the conviction to hold it during difficult times. We have seen it in the past where many of the stocks I discussed have jumped during the bull run and then corrected during slowdown and later again recovered during the bull run. So if you are a long-term investor, then don't be in a hurry. Avoid the FOMO. You can get all the details related to Tracxn business on the screen or website. So make sure that you do your research before investing your money. Alright, let's get started. Established in 2013, Tracxn is a leading SaaS-based global market intelligence provider for private company data. Now what does it mean? So just like retail investors like you and me spend time on Screener or other platform to analyze data of public companies, Tracxn provides this information for private companies to VC firm, private equity firm, angel investors, where they can subscribe to Tracxn platform to get the insight. So Tracxn has an asset-light business model and operate on software as a service based platform that provides subscription-based model. This helps in various activities like deal sourcing, then identifying mergers and acquisition targets, then tracking emerging themes across industry and so on. Basically, the pain point Tracxn is trying to solve is that information related to private companies is not easily available. And if you find it, it's not in a structured manner. So obviously that makes it challenging for venture capitalist firm or private equity firm and investment banks and angel investor and other incubators who are looking to invest in private company. And that's where Tracxn adds value by scanning millions of web domain with a team of around 780 employees that provide all the required information for private companies in structured manner. This information include detailed profile of companies like funding rounds and acquisition related information, then taxonomy and market maps, then your global competitor benchmarking, then financial information, then valuation and your capitalization table, employee count, investor profile, competitor mapping, then information about founders, key team, board member, then company and sector specific report and news event. So interestingly, Tracxn is ranked among the top 5 global player in terms of number of companies profiled, offering data of private market companies across sector and geography. Now that's a big deal. We are not just talking about India but globally. Their coverage include various geographies. For instance, in India, they cover over 2.7 lakh companies, and then you can see the breakup between funded, Series A+, C+, underfunded, and so on. In fact, you can get complete overview of startups in India on Tracxn platform that include top companies, then recent funding rounds. For instance, in 2023, nearly $14.9 billion has been raised in various equity funding rounds. In the same period last year, $35.2 billion were raised. So 2023 has seen a 57.7% drop in funding in companies of India as compared to 2022. And that is precisely the reason why Tracxn share price did not perform well, because 2023 was one of the weakest funding year of last 5-6 years. It was literally a funding winter. Obviously, it also impacted Tracxn business. However, 2024 can be a turnaround story, especially towards the second half of the year. We'll discuss it in future growth prospect. Apart from India, Tracxn also cover Europe with 6.36 lakh companies, US and Canada with 8.4 lakh companies, and various other geographies. In fact, if you have interest in startup ecosystem, Tracxn can provide you with all the required information. As far as revenue breakup is concerned, around 66% revenue of the company is from international market and remaining is from Indian market. I hope you got a good sense of their business. Tracxn has around 1000 plus customers across more than 50 countries. Now the next question here is, what is the moat of the company? So first of all, Tracxn operate in a niche market where the existing players are very limited. In fact, there are no listed players in India in this category. Now when it comes to global players, there are quite a few players, but the biggest advantage with Tracxn is cost benefit. As we all know, the biggest reason why Indian IT ecosystem has flourished and became number one globally is due to its low cost as compared to the global players. Likewise, Tracxn also has low cost benefit as compared to global players. Apart from this, what I really like about Tracxn is its asset-light business model. If you are following this channel, you know that I'm a huge admirer of asset-light businesses, and Tracxn also fall into this category. The interesting aspect is that since it's a technology platform, the scale is huge and the cost would not increase with the scale. It means as the company would expand its business, I expect the margins to expand due to economy of scale. And that's what makes Tracxn very promising. Apart from this, another key moat of Tracxn is its leadership. Let's have a look. So Tracxn founder and promoter are Neha Singh and Abhishek Goyal. Neha is the chairperson and MD of the company. She has done her BTech and MTech from IIT Bombay and MBA from Leland Stanford Junior University. Previously, she has worked with Boston Consulting Group, which is world's top management firm, and Sequoia Capital, again a leading VC firm. Then Abhishek Goyal has done BTech from IIT Kanpur. He has worked with top firms like Excel, 3i Infotech, Amazon, Yahoo. Not only that, if you look at other board members, they all have top education background and solid leadership experience with leading firms in the world. Then its senior management is also highly experienced. Mr. Prashant Chandra is the CFO. He has done BTech from IIT Kanpur and MBA from IIM Lucknow. Previously worked with Infosys and Amdocs. Amit Agrawal is the Chief Operating Officer. He has done his BTech from MNIT Allahabad and MBA from XLRI. Neeraj Chopra is the CTO. He has previously worked with Amazon, Deco. Bhaskar Sharma is the Chief Product Officer with BTech from IIT Kharagpur and PGPM from ISB. As far as investors are concerned, it includes top institutions like Elevation, Sequoia, Excel, Prime, and individual investors like Ratan Tata, Nandan Nilekani, Sachin Bansal, Benny Bansal, and so on. Not only that, if you look at the shareholding pattern of the company, promoters have around 35% stake, and it also includes 3.9% stake from FIs and 17% stake from DIs that include names like Nippon, ICICI, and so on. Here, public holding is showing 43.8% stake, but please note that it includes investment firms and HNI that total hold around 23% stake. Normally, you don't find FIs and DIs stake in microcap company. That is an exception. Even ace investor Mukul Agrawal is holding around 2% stake in the company. So overall, you can't ask for any better promoter pedigree or leadership profile. Since it's a tech-based platform, I expect the promoters to have technology as core competency, and both its founder and the team has deep technology background with the finest education background. So that for me is one of the biggest moat of the company. By the way, friends, I've created an Excel tracker with stocks that I find promising for 2024. You can get access to this Excel sheet on my closed community of serious long-term investor on my website, where I have weekly video series program that include one exclusive video every week. Again, I don't give buy or sell call there. I share my knowledge along with stocks where I am myself investing my money. Of course, I also cover key events in the economy, important news related to stocks, as well as I track more than 200 quarterly results that I also update in the weekly videos. In case you are interested, you can get the link in the pinned comment, or you can also access the same videos via join button on my YouTube channel. Now, so far we discussed the business model of Tracxn, its leadership and key moat. Now let us look at the future growth prospects. As far as private investment ecosystem is concerned, there is no doubt that it is a large and fast growing market. On the screen, you can see that private market AUM has crossed $9 trillion and is growing at 12% rate. However, last year has been one of the worst years for a private investment market. Global tech funding fell down from $590 billion to $168 billion in 2023 year to date, which is at 6-year low. Indian tech funding fell down from $43.7 billion to $7 billion. You can see even the unicorn creation reduced significantly. In fact, global mergers and acquisition fell down to 10-year low, and mergers and acquisition advisory fee also fell down to 10-year low. The simple reason is due to higher interest rate globally that resulted in liquidity crunch. As a result, Tracxn performance was muted during 2023 and hence share price did not perform well. However, there are some signs of recovery. Global tech funding has improved from lows of June 23 to August and then September. Indian tech funding has also slightly recovered from lows of June-July. Going forward, this recovery in the private market would be the biggest growth driver for the company. Interestingly, in spite of lower deal activity, Tracxn platform usage has increased nearly 2 times in last 2 years. So there are indications that Tracxn performance is expected to improve in 2024. In fact, in one of the latest interview, company's chairperson Neha Singh mentioned that they expect to grow at 30% CAGR rate by end of the current year. Although it's a bit early to expect big outperformance, but since we are currently in bull run and there is expectation of better performance in 2024, Tracxn share price is rising on account of increased interest among investors. Tracxn is also trying to untap the huge potential in private market space with various growth initiatives. So number one initiative is GTM funnel. That is go-to-market funnel that include lead generation, closure, support and engagement. For instance, company's organic search traffic has increased 8 times between FY21 to H1 of FY24. In FY23, they have received 9 million visits. In H1 of FY24 alone, this number is 8.7 million. Then second initiative is press mentions. There are nearly 1,000 plus press mentioned across media. Next, company is expanding its coverage of companies' financials and cap table. Currently, it covers private company financials across 15 plus countries and cap table across 10 plus countries. Going forward, this will help accelerate company's revenue. Then company is also expanding its team by setting up a separate team for expansion within existing account, mainly by increasing penetration of paid licenses within accounts. Friends, personally, I think that the private investment universe is huge with ever-growing PE firm, VC firm, even angel investors, and the private market AUM is already $9 trillion. Considering this, Tracxn entire revenue for FY23 was just 78 crore. So it's just the beginning of their journey and there's a long way ahead. Now let us look at company's financials. So if you look at company's sales from 2018, it has grown at a consistent pace from 28 crore to 33, 37, 44, 63, 78 and now 82 crore. In last 3 years, company sales have grown at nearly 30% CAGR. Company was in loss initially at operating level due to initial investment in building the assets. However, now its margins have recovered significantly. In fact, in Q2, company has managed to fetch more than 9% margin. I expect the margin to expand further as company achieves more economy of scale as it has an asset-light model. In terms of net profit, in trailing 12-month, company achieved 34 crore of profit, but this is not a right way to look at it. Company is also generating positive cash from operation. Company is completely debt-free and has a high ROE of 68.9%. Although its ROCE is on the lower side at 12%, but this ratio would significantly improve in the future. So overall, company business is growing at a healthy rate and its margins have also expanded. Company is debt-free and generating free cash from operation. These are all positive signs. Finally, if you look at the valuation, company is currently trading at around 110 rupee and commands a market cap of around 1150 crore. Now on screener, you will find the PE ratio is 40, but this is not a right way to look at it as company has 8 crore of other income in trailing 12 months and profit before tax of 11 crore. Although PAT is showing 34 crore, which does not reflect the right picture. Its price to sale is showing 14 and EV to EBITDA is 160. Again, can't really look at EV to EBITDA as EBITDA is expected to grow exponentially in the coming years. So there's not really a right parameter to look at the valuation at this point. All you need to do is decide whether you want to bet on this company based on future growth potential or probably wait for the results in the next few quarters and then take a call about investment. Or third approach could be to take some position and track it and then decide to accumulate or reduce based on its upcoming performance. Friends, Tracxn share price has rallied sharply in last couple of months with a hope for revival in private market investment. However, any negative or unexpected results can result in your correction in share price in the near term. Considering the potential if there's a correction in Tracxn share price, I would be happy to accumulate. Of course, I'll keep a close eye on the quarterly development. Now let us try to understand the key risk in the business that can impact company's growth thesis. So first key risk for me is the unexpectedly long winter in private investment sector. Tracxn performance is coupled with private market investment and we have seen that in 2023 it was very bad for private market. Now the expectation is that 2024 could see a turnaround with market, global interest cuts and increase in liquidity. That would drive the funding in private market. However, any delay in private investment market recovery can negatively impact Tracxn performance and share price. But like I said, any correction can be utilized to consider adding this company in a systematic manner. Of course, after you are done your due diligence. Then second risk is competition risk. Although there is not a major threat from domestic competition, there are quite a few listed players in this space globally that include Crunchbase, CB Insight, PrivyCo and PitchBook. So competition risk would always exist. Then third risk is attrition risk. In a technology business, employees are the biggest asset of the company and you don't want too much attrition. Now Tracxn witnessed an employee attrition of 49% in 2022. Although that was a time of high churn in tech sector, but this is one important parameter to keep an eye. So in this video, we discuss the fundamentals of Tracxn Technology. It's a microcap company with a market cap of just about 1150 crore. It's a leading player in market intelligence data for private investment sector, which is itself a huge and growing market. Now 2023 was the weakest funding year in last 5-6 years. However, I expect the situation to turn around in 2024. It might not happen immediately, but in the past, company revenues have grown at nearly 25-30% CAGR and its management is expecting similar growth rate by end of 2024. Tracxn has a very profitable and scalable business model with strong promoter pedigree. It's a debt-free company with positive free cash flow. The business model is scalable and the market size is huge. But yes, everything would boil down to company's ability to execute. And of course, a lot would depend on recovery in private market investment. Since it's a microcap company, share price can be very volatile. So keep that risk in mind before taking any decision. So this is it for this video. Now tell me in the comments, what do you think about Tracxn? Is it worth taking a bet? If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.